Yes, 2020, the big worry is that 2020 will be a recessionary year, and we have a very long expansion, and we have the yield curve suggesting an inversion, maybe a recession down the road. But the key question is to what extent what we are seeing now from the Fed, the 75 basis points that we got, was a mid-cycle easing or a late-cycle easing. That will determine where you are in the recession call. I suggest that what we have seen was a mid-cycle easing. The Fed cut by 75 basis points exactly because they can. They can do it because inflation is not an issue. And this actually cut will postpone the next recession, and that's why I think this is a mid-cycle easing like in 1995, 1998, and that's actually positive when it comes to markets. So I will call not a recession in 2020, one, because of the cut by the Fed, two, because of the fiscal stimulus that will come from Washington and from Ottawa, and three, we believe that the trade dispute between China and the US will be resolved, at least on a temporary basis, by 2020. That will help markets as well. Within this framework, I see the stock market outperforming the bond market. Within the stock market, there is a point to make that maybe the Canadian stock market will outperform the US stock market. One, because of valuations, we are cheaper. We also have a situation in which some segments of the market now are so dominant: banking, communication, grocers. All those forces are actually positive, and they are paying dividends, and the rate at which Canadian companies are paying dividends and buy back stocks is much higher than you have in the US. So we have a situation in which all those forces might suggest that the Canadian stock market will outperform the S&P 500 in 2020. Both markets will do fine. I believe that most of the improvement will be in the second half of the year, when we have enough time to get the positive impact of monetary policy and fiscal policy.